Matt, markets have been crazy, interesting, fascinating to me. I think probably one of the craziest things is actually the politics behind the market. And I don't really care about the right, left, center stuff. But what I do care about is that our president, Trump, has been jumping in both feet right into the middle of the pool and been splashing around a little bit. The tariff stuff that we talked about last week on the podcast, a day later, Gary Cohn resigned, and intraday. And in the evening on Tuesday, the market actually gapped, the futures market gapped down. Now, at that moment, I was concerned that maybe this is going to trigger some selling and all that kind of stuff. And then boom, through the week, Matt, the market shrugged it right off. And then here we are at all-time highs. What's your take on the reaction of markets from Cohn's resignation, the tariffs in general, and how they've kind of just ignored it?
Well, it's just fascinating to watch people, how they kind of shun some negative news versus positive news. It's just interesting to see what the market is focusing on to a certain extent. I still remember the gap you were talking about, the gap, and I'll just kind of pull it up here on my chart real quick. But the futures market closes just for a little bit every day. And right when the market closed is basically when Gary Cohn came out there and said, basically that, he's resigning over his disagreement with the tariffs. And that gap, Tim, was right here. And so as you can see, the market closes right here, and then it reopens up, and you see this gap in price. Well, guys, this is the visual representation of how the market prices in certain things. Mm-hmm. You see that initial gap coming down, and it's not that big of a deal, but Tim, you are talking about gaps from 2723 all the way down to 2700. So it's about a 1% movement to the downside. And then the market recovered, and as you can see, there's no more gaps, and everything was perfectly fine. You look at this from a technical perspective. Let's just look at the market from a pure technical perspective. The market is in, and what I called last week is I said the market was in some degree of what we call a symmetrical triangle, mm-hmm. where you basically have this type of scenario. And so you have this resistance level coming down versus, say, this support level going up, however you want to connect those support levels. And it's going to break out one way or the other out of this level. And as you can see on Friday, it gaps out. It doesn't gap, but it breaks out going back to the upside. That is a very positive signal for the marketplace. Now, the market is sitting here at the resistance level. It's showing a little bit of weakness right now in the market, but overall, the market is very strong right now. We're still in the bullish market. I believe we're on the 9th birthday of
March of 2009.
March of 2009. So, we're going into the ninth year. There's reasons right now to be concerned. Obviously, it starts with this movement here, but overall, the market still is very strong. And last week with Keith, we talked about, Keith was made the joke, I guess the FANG stocks aren't dead yet. Look at the NASDAQ here, Tim. Unlike the S&P, look at the S&P. So we're looking at the S&P on the first chart. Look, the S&P is sitting at resistance. Even though it's breaking out of the symmetrical triangle, a positive sign, you're still kind of sitting at underneath daily resistance, and you're still underneath the all-time highs at 2878. Versus on that NASDAQ, you look at those tech stocks, you look at the FANG stocks, those NASDAQ stocks not only are strong, they are ultra strong right here. And I hope people listened to the podcast last week and took action on that, because Keith was dead right on that assessment on the NASDAQ versus the S&P 500. And there's nothing I'm seeing. Both are bullish right now. Both are bullish. But if you're going to take one, give me the NASDAQ, which doesn't have overhead resistance right now, and the S&P does.
No question about it. And by way of announcement, by the way, if you're hearing Matt's delivery change just a little bit, it's because we've got video and audio today. And if you're listening to our podcast just through your earphones, that's my favorite way to do it. Definitely keep downloading it to your phone and listen to it on the go, in your car, in traffic, all that kind of stuff. But if you ever want to watch the video, we're going to start recording the market Skyline and giving this a shot. Right, Matt?
Yeah, we're going to be recording the market skyline from now on. I mean, people, we've heard a lot of comments on the pod that they love the market skyline, and for traders out there, they can see these, they can visualize these resistance levels, these support levels that we talk about each week. But we felt, for some of the new people out there, having the visual behind the market skyline, so definitely go out there and subscribe to the Trading Justice YouTube channel. We'll both have the market skyline on there. We'll have obviously other videos we'll be posting on the Trading Justice YouTube channel, as well as like them on the Trading Justice on Twitter, Trading Justice on Instagram. But it is the YouTube channel that we're going to be posting things primarily to.
Yeah, obviously we're trying to just have a lot of fun while we do this, and hopefully you guys are getting value out of it. We try a lot of things. We're not afraid to throw stuff at the wall, Matt, and see what works. I love adding the video component of it. There's no question about it.
Well, and what's interesting Tim, real quick, if you do like the videos, guys, help us out. Share them, like them, make comments on them. If it's things like that show us, okay, this is kind of, people like this, they don't like this, and we make decisions on that. So if you do like it, guys, share it, tell us about it. Email team@tradingjustice.com. Give us your suggestions, whatever it is. This is our, Tim, for the longest time, spreading the good financial education message to the masses. This is our way of promoting free education for people, right? Use it. Well,
I got to tell you a funny story about technology stocks. So last week, I got to a point with my wife where I said, honey, listen, we've got extra cash in the 401k. We have a solo 401k, which means we can buy our own stocks and whatnot.
Yeah.
And I'm like, we got to do something with it. And just like we do in our workshop, I said, Bree, you've got to pick a stock. I can do this for you, but I want you to learn the process. So give me a company you love. And she says, okay, well, I think Elon Musk is going to change the world. And so we picked up 100 shares of Tesla. And lo and behold, within one day, my wife picked her first stock. It's up 5.71%. So
it's good day, sitting at support. Hey, Bree, watch that 360 level on Tesla, right? Watch that 360 level. A breakout of 360 on Tesla, it could get to 400 fairly quickly. Good pick there, Bree.
So she made she's already up like $2,000 on her first trade.
Not bad, Bree.
Still not interested at all, by the way.
No. But maybe if Tesla breaks out at 360.
Sure.
So hopefully.
Well, okay. I will say this, though. It did get her interest a lot more when I started telling her, well, let me explain how put options work, because you can also protect what you've made. Yeah. And then there's a whole process of education. It's amazing how this stuff works once you really get into it.
Tim, talk about the market cycle, though. Looking at the S&P 500. We had a new newsletter out this week on, at Trading Justice on, buying those put options, portfolio hedging, and it was a great newsletter that Tyler put out there for us. And I look at that, and I'm looking at the S&P, Tim, with the Nasdaq breaking out, the S&P, breaking out of the symmetrical triangle. I mean, are we back to this is just bullish, and let's be positive to bullish? I mean, where's your head at on it?
Well, I would rank it a +1. We always talk about 0, 1, 2, 3. There's different degrees of bullishness that we use, and I would be a +1 right here. I think you got to respect the green candles. If I'm counting them here, Matt, there are 7 green candles in a row. Now, today is still in the middle of the day as we're recording this. That's a strange looking doji, whatever kind of gravestone doji you'd call that, or whatever it is. Almost a reversal signal there, maybe at the 2,800 level. There's a pause right here. There's no question about it. But in general, the upward movement, the break of the symmetrical, you've got to respect it. And there are areas where you could be a little bit more confident. I like technology. I like China. I like international stocks. Go to the ETF FXI. I'll show you one that I do like. See, if you're out there and you're listening, there's so many different ways you can invest. And I like the double bottom here, as FXI was kind of putting in a little W pattern. Mm-hmm. And if I have to invest in somewhere, I'm thinking, China is still an area where I have a lot of anticipation for bullishness.
So especially if you're talking over the next 10, 15, 20 years, right?
Yeah.
But once again, I mean, over the last month, Tim, we've talked a lot about insurance, right?
Mhm.
And quite frankly, I wouldn't have anybody having any problem saying, you know what, I still want to own the insurance because this thing can flip on a dime. But if you are looking at this purely from a technical perspective, I do not believe there is reason to have insurance right now. In terms, if you're looking at it purely from a technical perspective. If you're looking at it from a market cycle economic perspective, that's a different discussion. But from pure in the market skyline, purely technical reasons, Tim, what we're seeing should lead to a higher increase in price. Would you agree with that?
Yeah, that's why I'm a +1. I'm
Yeah,
cautious, but
I'm cautious, but I agree. I agree.
with the
So
volatility. And by the way, seasonally, this is the time of year where markets tend to do well from a seasonal
yeah,
perspective. March and April have been bullish months for the stock prices over a 50-year period. So in general, it's a great time of year. It is bullish right now. I'm not
we're,
aggressive though. I would not say +2 or
well, you
+3. I would say a
did buy
plus.
Tesla. That's aggressive.
That is fairly aggressive.
That's aggressive.
Yeah, there's
But
no
no, I
question
get your
about it.
I get your point. I agree with the positive one vibe here. If the S&P 500 gets back up above resistance levels and the Nasdaq stays above resistance levels, then you're talking somewhere back to raging bull, +2, +3. But until that happens, with us still being underneath all-time highs, volatility is still here. News cycles are still here. I think the positive one is the the right call on that. Look for the S&P if it does maintain above this level at 2790. It's currently at 2788. Look for that to appreciate into the 2880 level. It's another 100 points, but if it does stay above this level, that's where I expect it to come down. If not, it's not bearish. It gets back into neutrality. Tim, looking at the next one here, let's go ahead and let's look at the dollar index. The dollar index, DXY on the index, for those of you guys who are watching this on the video, the dollar index has shown tremendous weakness over the course of the last year and a half, Tim. We have actually had a depreciating dollar agenda for a while now, for many years, but it seems like it is slowing down a little bit, similar to what we saw back in August, September, October, where you had this inverted head and shoulders, left shoulder, head, right shoulder, short-term uptrend. We're seeing a little bit of that happen over here, Tim. What's your take on the dollar?
I'm still bearish. I see the overall long-term downtrend. I know that it's shown some strength and some resiliency during the latter half of, say, January and February. It's kind of popped up off the lows here from a smaller perspective. But when you pull it back and you look at the weekly candles and you look at the big picture, we've got a long-term downtrend in a currency environment where they are intentionally trying to kill the dollar. I mean, Munch and Trump and all of them, they've been talking about a dollar depreciation strategy. And obviously they're going to continue to push that. Fed is
Well,
going to raise rates.
corporations love a weak dollar strategy. Corporations love that. They export more goods. So we've had that. I agree with you. On the long-term chart, stronger. It's showing a little bit of just a low base situation. I would not be surprised, Tim, to see this go neutral for a while. That wouldn't surprise me in any capacity. You're seeing some reasons to buy right now, increasing support zones. You're still underneath long-term resistance zones. I got a neutral call on the dollar for this week. I expect neutrality. But if you're looking at breakouts one way or the other, you're looking at the breakout right above this level, somewhere in between that 90.75 area, all the way up to 91. That's your resistance area. It was old resistance back here in January. It was resistance again in March 1st. That's your breakout level, is at 91. Your breakdown level is very quick. Is very easy. It's 88.60. Maybe the ultimate low of 88.25. You do have a short-term support level right here at 89.42, but in my estimation, it's this support level at 88.60 that is important. So I expect sideways between those levels. A breakout above is a buying zone. A breakout below is a selling zone.
Let's move on to crude oil next, because anytime you're dealing with currency, it's going to impact commodities. And crude is the biggest commodity in the world by size, by scale, by all of it. And if we're looking at crude here, Matt, this is one I trade quite often. I've gone to a neutral position here.
Hmm.
I actually have both sides of the spread on for an iron condor because I am neutral here. When you look at that trend and that chart, you seeing the same thing I am? Neutral, range bound?
Yeah, I am seeing neutrality here. But it's not neutrality to the same degree that you're dealing with the sideways trend. I see that I see a longer term uptrend and I see a shorter term downtrend here.
Hmm.
Very similar to what the market was doing after it clipped to the 200-day moving average and then hit resistance. You're seeing a symmetrical triangle to a certain extent, with a decreasing resistance zones, increasing support zones, putting tremendous pressure on crude between 60 and 60, really kind of that 62 and a half. I mean, yeah, you got overhead resistance at 64 and 66, but I'm seeing this break kind of, and again, similar to the break last Friday on the S&P 500, you got this little trend line coming down, and it is puncturing that trend line multiple times over the course of the last week and a half. So I'm looking at that as your resistance line, and if that breaks out on top of that, very similar to what we saw last Friday on the S&P 500 itself. When it breaks out of that level, you see it appreciate fairly quickly back up. That's what I'm seeing on crude. Now, if you look at it from a purely technical perspective, Tim, you would have to give this a positive one bias, just given the longer term trends are stronger than shorter term trends. But I really give symmetrical triangles a coin flip type certainty, breaking out one way or the other. I've seen these things break down as much as I have up. $60 and $58 is your support levels. 62 through 64 is your resistance levels, with ultimate resistance at 66. I'm going to maintain my neutrality on this. I do expect a breakout. Unlike the dollar, where I expect the dollar to kind of hover one way or the other, the dollar could go back down to 89, Tim, and crude could go back up to 66 in a heartbeat. And
You know,
so yeah, I got neutral, but I'm leaning bullish, but I do have a
It's
neutral
great
rate.
analysis. One of my favorite things about this crude chart, Matt, is right there on the high. It says 66.66, which some people will
Good
take the
stuff.
wrong way. I actually just think of the game of Yahtzee. I want to roll that fifth six and get a Yahtzee here. There's
Well,
no,
let's get it. A fixed six, a buyout of the breakout of 64. I mean, $2 to the upside on a futures contract. That's a good six, baby.
no question about it.
That's a hard four. I think that's a hard four. Is a hard four in craps? Is that hard?
Hard four is 2-2.
Yeah.
Don't you know there was
What's
a
the
movie
probability of
called The Hard Four. The probability of hitting a hard four is 1 in 6 and 1 in 6. So to get an exact two and an exact two, it's 1 in 36, I believe.
it?
If I'm doing my math right, 2 and 2. So you got to get the 2 and 2.
Stop it. Just
Yep.
stop it.
C'est la vie. Now
Yeah.
you're going to make me
Moving
pull
on.
out a calculator and like probability analysis and
You get
all
my
kinds
point.
of
You
stuff.
get my point. It's hard, but yeah, it's good.
Talk
So
to me about natural gas. We don't always do this one on the Skyline, but I do know that you trade a lot of natural gas.
mhm,
NG right there.
yeah.
Yeah. And nat gas is actually showing a little bit of a low basing pattern here. Do
Mhm.
you see this as a bear retracement or as the start of a new uptrend?
I see this as a bear retracement. I trade a lot of natural gas. Natural gas is part of personal gold. You and Beth talked about that system. And on natural gas, it's either a spread or a naked put, or a spread or a naked call.
Hmm.
And last Thursday, right here, Tim, right in this range right here, I sold the naked call, and I think I sold like 320 up here. And then the only reason I would do that is I got a lot of range to the upside, number one, but it's because I expect it to come back down. And so it retraces back up. It's hitting its head on 280. And as you can see here, and all around back here, 280 was a very, very strong support level for natural gas. And so kind of my whole thought process was the retracement back up into resistance. At a bare minimum, it should hang out here, right?
Mm-hmm.
At bare minimum. So my expectation is neutrality, slightly bearish on natural gas. It wouldn't shock me if it hit 3 before it comes back down. That wouldn't surprise me in any capacity. That's why I sold 320. So I felt like the most likely scenario was neutral to down, but as long as I sold underneath above $3, I was fine with it. And so, I do have a negative one bias on crude, but anything between 2.6 and 3 would not surprise me on crude. So if you're looking to cash flow on crude, you're looking to sell somewhere around 2.4, and you're looking to sell something above $3. If you're looking at that, I wouldn't trade crude directionally. I wouldn't trade natural gas as a speculative trade. It's too random. It's too random for that.
Mm-hmm.
Use crude, use other instruments are far better than speculation on natural gas. But, if you're looking to sell something like in personal gold, this is a good time to sell something on the bear call side or the naked call side if you got a little more skill set. If you don't, definitely do the bear call. But I do have a negative rating on this. Looking at the two, we got two left here to go, Tim. Looking at gold, where's my GC contract? I don't have GC up. So, Tim, we got gold here. You were expecting a lot of concern over the potential M formation in gold. It's still there. My point was, look at this to come back up. Nothing has changed the M formation here, though. It's just kind of held the neutrality. Tim, what's your take on it? Are you still a little concerned about gold, especially with the dollar hitting resistance?
I am. I'll tell you why. I'm a believer in the metal. There's no question about it. The gold silver ratio to me has better value in silver anyway. So if I was going to buy one or the other, probably would look at the silver. I have concern about gold because, Matt, everything that's going on in this world, you would think gold would have gone up more than it has. And I keep scratching my head, like, what's going on with the price here? And I worry that you're going to see a dip, especially if you violated support. Now, as is, I'm neutral, okay, from a short-term perspective. I've got support at 1310, right? I've got resistance at 1360, and we're sitting right here in the middle of that. So I've got a neutral call on this for the short term, but I have some concern about that support zone. I've got a lower high on the pivot point, and there's pressure. I don't know.
Yeah.
There's a lot of just red flags to me in the gold pricing.
The biggest red flag I have right now, Jim, is you have the confirmation of the M formation last week. But the biggest concern for me is this movement right here. You see how it comes back up into resistance at 1340 and then comes back and retest? This lower resistance level is a big deal for me. And the reason is that is now a lower resistance level for the bears who trade gold. Obviously, the buyers are trying to hold it up above, 1310, 1315 in that area. So, and in the short-term scenario, I'm concerned as well. In looking at, but I don't trade gold from a short-term perspective. I invest in gold typically.
Mm-hmm.
And so as an investor in gold, Tim, I still see a longer-term trend that is bullish. I see an intermediate trend that's neutral, but I do still see the support levels have increased on the weekly chart from the double bottom we had at 1200 to 1250 to now above 1300. So it's that overhead resistance at 1350 to 1375 that is really putting pressure on this too. So, it's interesting on that daily chart because that M formation we're looking at right here, that gives us a lot of pause, a ton of pause. But when I pull it out to the weekly chart, I still see increasing support levels and a horizontal resistance level. And for those of you who are watching this on YouTube and not just the actual podcast link, you'll see that you have horizontal resistance and you have increasing support zones, Tim. And when you have horizontal resistance, increasing support zones, that is typically an indication that eventually we should see a breakout here. It might take some time, obviously, but eventually we should see that breakout here. And, and that's why I'm not going to freak out over the short-term M formation here, although it does give me pause for concern. But Tim, even if it breaks down out of this M formation, it still has major, major support at 1300. And so for me, it's not, if I'm an investor in gold, I don't want a stop loss above 1300 here. If I'm an investor, 1300 has been a major number for gold for a long, long time. So, you just don't want to get out of this investment above 1300. But even if it goes down to 1260, I'm not getting out of my long-term gold investments. Just
Sure,
not
we call that a buy the dip mentality, which
yeah.
means anytime price goes down, you're going to go in and do some
Because you believe in a
accumulation.
long term.
Yeah.
It's not dollar cost averaging, and it's not the radical buy the what is it BFTD, buy the effing dip or whatever it is. It's not that mentality. It's the fact that I want a longer term investment in gold, and there's my longer term investment in gold is not based on technical analysis. It's
I've
based on
never heard of this.
and economics.
BTFD?
You've never heard of BTFD? Buy the effing dip.
BTFD.
BTFD. Buy the effing dip. You need to get on Twitter more, bro.
That sounds like a Twitter thing. Oh, say lovey. Moving on.
It is a Twitter thing.
Let's move on to Bitcoin.
Big ol' Bitcoin. Big ol' Bitcoin.
Now you look at the XBT contract. I look at the BTC contract. Are there differences in the pricing?
Slight.
Look at the XBT. It's 89.60 here. Go to /BTC. So the one is the SIBO futures, and I look at the CME Group futures.
Mm-hmm. I look at the BTC.
XBT.
XBT, yeah.
Mm-hmm.
So BTC.
Correct.
Okay, there's going to be price slightly different.
Just a few pips.
The trend, the text. I mean, BTC and XBT were both at resistance at 12,000. The bid-ask spreads on Bitcoin are so wide that you see this across the board at Coinbase. You see it at what is it, CoinMarketCap.com. You see it at the exchanges out there. The bid-ask spreads are so wide at different exchanges that it might have a slightly different price, but it's not that big of a difference. I mean, I think it's $30 right now is the difference in the BTC versus the XBT contract.
Well, and as we look at the chart here, there's been quite a bit of concern in the news the last few days. You've got 5 red candles in a row. You have regulatory concerns. It seems like the last few months, Matt, has been a conversation about regulation with Bitcoin. Mm-hmm. Do you think it's a good thing for Bitcoin and cryptos to get more regulation from governments and whatnot?
Yes.
So why is it that we get the pressure whenever regulation comes in? Because I actually think it's a great thing as well. I want a regulated market.
For the same reason that whenever you talk regulations with the stock market, it goes down.
Yeah.
Whenever you talk regulations with anything, you're talking about the difference between efficiency and ethics and morality is kind of the line you're drawing. So you don't want Wall Street to rip people off, so you put regulations in place to punish people for ripping people off. But then that stops Wall Street from overtly speculating on cash deposits and doing the things that drive the market up in the first place. So it's a difference between, do you want an unadulterated free market, or do you want a market that is good for all? And I personally want a market that is fair and good for all. And you need to regulate markets. I mean, Bitcoin and other cryptos are still widely used for illegal activity, and I'm not saying that as a negative to the people that invest in Bitcoin, because I've said for a very long time that doesn't bother me, because
I don't buy that argument. Yeah.
Well, before you had the Bitcoin, you had dollars being used for illegal activity. Yeah. I don't see the God-fearing people of the world saying, I'm not going to use a dollar because somebody used it in sex trade. So, but you do see that with the crypto market. You do see people hate on the crypto market because of the whole, sex trade, drug trade, Wall Street hiding money, all these reasons. But again, they had dollars before they had crypto. So, it's not. I used to tell the joke that just because you have anonymous purchasing doesn't mean I'm going to go start a drug cartel. And so you want an unadulterated market to a certain extent, but you don't want a market that's ripping people off. And so Bitcoin and crypto, if you truly do want to be welcome to the big boy table, you need regulations to the same degree that other currencies do.
Yeah, Matt Escobar.
Yep, Matt Escobar. I want a picture of me with Escobar's mustache.
I think that would be so funny. I will say this. I got to tell you, I spend my Sunday doing a lot of research and reading, and I start thinking about it. And I only have so much time to do certain things, Matt. An hour I spend on one thing, I'm not spending on another, obviously. And I spent 2 hours yesterday researching more cryptocurrencies. Mm-hmm. I'm a huge believer in the marketplace. I believe there's huge opportunity, as we move ourselves forward. And there's a lot of viable choices out there. Bitcoin just has to be the standard that we all start with, right? But Ethereum and Ripple and Dash and all of these others that you need to look into if you are a crypto currency investor or if you have interest in it.
Yeah, well, it's you got to embrace it. I can remember a few instances over the last really 4 years that we've talked to people about crypto that, we basically said, just go do it. Just go do it. We got sick of talking about why people need to do it. And we're like, just go do it. just a few. And I read a story, Tim. You actually sent it to me and talked to me about how one guy you were teaching, and he said, just go buy it. Just to get familiar with it. And it was like, whatever it was less than $1 at the time. This is years ago. And the guy bought enough that it's now worth $200,000, right?
Yeah.
Same thing with, we've talked to Cody Mackey about, his Ethereum and Bitcoin experience, and I'm sure many, many, many others have made a lot of money. I was listening to a podcast recently about the NFL, and the producer of the podcast, and I think it's called Around the NFL, Tim. It's a woman, and I guess a few years ago she decided to go buy some Bitcoin. And apparently she forgot about it, lost the account. And so they were talking about the last couple of weeks on their podcast, and they finally found it. She goes, yeah, I'm worth 7 figures. Yeah. And some people hate on that, and I don't. I'm just like, that's awesome. Good for people, and Bitcoin is a people's currency, and same with Ethereum and whatnot. But the simple reality is there's risk here, Tim. And for every one of these stories, we've heard about people buying Bitcoin in 2014, 15, 16, and even into 17. We've heard as many stories in the last 2 months of people getting wiped out, versus all that was made. So you have to approach it like that. Last week, it was sitting at 12,000. That was our initial target when we gave the buy at 10,000. We said, I believe last week, that there was nothing that we were saying to get off the call, raise the stop loss. Bitcoin can adjust on a fly, and it did. Yeah. But, there's nothing that I'm seeing today versus last week or the week before that I would have changed. Obviously, it's coming back down a little bit, but it actually might be forming a better technical pattern, Tim. I mean, if Bitcoin does form a higher support level from this to this, you might have some degree of head and shoulders formation where you have, again, horizontal resistance here with a left shoulder right at 10,000, a right shoulder, a head at 6,000, and potentially right shoulder somewhere between 8,000 and 9,000. And if that happens, it goes back to, once again, don't touch it. Not right now. But the buy signal on a pattern that might be forming here in inverted head and shoulder is a breakout of 12,000. And if it does break out of 12,000, it could get up there fairly aggressively. That 12,000 mark is important.
Now, Cam, get your beep button ready because, Matt, I got to tell you the funniest thing I read in one of the articles I was reading. He was calling them shit coins.
How is that bleep material when there's a coin that's a fuck you coin?
Oh,
and by the way,
get your shit coins.
He doesn't have to get ready for the bleep. He's gonna. No, it's. I get it. But Bitcoin's volatile. There's nothing that's happening this week that has changed anything. That Bitcoin's volatile. So people who invest in Bitcoin, they know it's volatile. People who trade Bitcoin, that 12,000 level is very important.
Now I need a meme of who's now passed away, Jim Leahy from Trailer Park Boys, calling them shit coins. So Cameron, you're getting some
that. I want them. I want the. Are we going to go GIF or GIF here? I want the GIF. I want the GIF. I want the GIF with Trailer Parks. Jim Lee, is it Leahy?
Jim Leahy.
Leahy saying shit coins, and I want it on Trading Justice Twitter channel. Guys, you've been listening to the Trading Justice podcast presented by Tackle Trading. If you've enjoyed the market Skyline on YouTube, give us a nice little like, make a comment, all that jazz. We'll be right back with more from Trading Justice. All right, give me 2 minutes. I'll be right back.
Okay.